How's it going, fam? Been a while. I wanted to follow up with y'all on some stuff that I've been noticing in this market. Foot Locker just announced earnings, and for lack of better terms, they crapped the bed. There is some economic weakening going on throughout the world, not just in America, that I'm noticing. Now, Foot Locker, this company was deemed undervalued and paid a as you could see, paid a pretty big yield. That dividend got cut. So management, Foot Locker management, they're going through some tough things. Less foot traffic happening. And this is something that I'm noticing and I'm keeping my eyes on because I'm a Crocs shareholder, right? So, and Crocs, what do they sell? They sell shoes. So that's something to consider if you're invested in a company that sells a particular product and other category competitors are reporting earnings ahead of yours or after your companies. It's always good to pay attention to what they're reporting. All right. So if you let's go to Foot Locker's financials, you'll notice their balance sheet. Let me see here. Yeah, so their balance sheet they only have 180 million on their in cash and cash equivalents. Let's go down here. Yeah, so they have three times more debt than what their company's worth, and they only have 180 million in cash, and their free cash flows are taking a hit. They can't afford the dividend. They can't afford to keep paying this dividend out if their cash flows are being hit. So they slashed that dividend, and a majority of that shareholder base of Foot Locker are dividend investors. The only sole purpose that a lot of those category demographic cohort of investors, the only reason why they're there is to receive a dividend. And I mean, I understand that. And naturally so, if they slash the dividend, a lot of those dividend investors are going to say, you know what, I'm out. I'm not interested in being a shareholder anymore. So um, so, how does this affect Crocs now moving forward? Well, the way I see it is Foot Locker is a retailer. I don't, from what I understand, they don't sell their own brand of shoe. So, I'm not really too worried about that. Now, Nike, however, Nike is showing a little bit of weakness just like everybody else, though. But let's go back to Foot Locker. So, Foot Locker is more of a they have a little storefront in usually malls, like shopping malls. And if the economy is getting a little more pressured, people are not going to go to the mall as much. Those are more of the premium. I'm going to pay or spend a bunch of money at the mall. If people are cutting back and being more economical, they're not going to go to the mall. They're going to go to Walmart and try to save some money. So that's something to consider. I think that's one of the main reasons why Foot Locker is getting hit. Um, and a lot of the shoes that they're selling, yes, Crocs recently had a partnership where some Foot Lockers are going to start selling some Crocs, but that was pretty much a freshly new partnership. So I don't think that's going to affect too much on our end as far as Crocs goes. Now Nike, this is the giant that you know they're seeing a little bit of a decline in stock value. They're down about 16.5% in the past 6 months, but they're paying dividends and they're buying back stock, and I'm going to expect that their premium is going to hold um, as far as what kind of PE they're going to be able to command, even in a recessionary environment. Nike's got such a stable business model that they're just going to be able to. You just know they're going to be okay. All right. But I'm not in this game for stable, and I'm not in this game for minuscule gains. I'm in this game for I'm in this game for dramatic gains. So, um, Crocs. There's some weakness over in China too. They're going through some real estate crisis business. And there's a lot of consumer discretionary stuff that they're not. A lot of people over there are just deciding to not spend money. So that's something I'm going to keep an eye on. Crocs is undervalued. I don't think that their free cash flows are going to take a hit. Um, and these are freshly empowered free cash flows too. Um, so if they maintain their free cash flows, and let's say they don't grow for their revenues, stock's still undervalued and it's still a buy to me. So that's how I feel about it now. If we start seeing declining revenues and destruction of shareholder capital and declining margins, you know, stock going to go down. If if we see, let me see here. I actually wouldn't be surprised if we go down to this $70 mark ish if we see some revenue and margin compression. Okay. So I'm a little more, I'm still adding to my position, but I'm just a little more cautious now that I'm seeing these other earnings and different things happening in the economy. Here's another position though that I'm actually looking to buy more of. I'm not completely sold on, you know, where capital is going to be allocated. I do have a limited finite amount of capital. So SoFi Technologies is a bank. It's an internet bank, and it's partially a fintech. If you want to classify their Galileo and Technisys platform as that side of the house. Um, so let's yeah, that's going to be one of the positions in my portfolio. But let's take a look at a little update here. All right. So currently, all right, here's my Crocs position. And this is taking up, I'm overweight on Crocs. 25% of my portfolio is Croc stock. So that's pretty overweight. And if I keep adding and press this to 200 shares, then yeah, that's gonna boost depending on the fluctuation of the stock, of course. That's going to boost the percentage of the portfolio and the more riskier it's going to get because they're leveraged and there's some economic concerns happening. I'm a little more cautious. I don't want to lean too much into it too quick, but I still intend to continue adding to the position. Um, and here's the great thing about market downturns, all right, and how this all works. Stock's not going nowhere. All right, like I can you can always go back and buy it. And in fact, it's a down right now. We're in a downtrend. So, um, like the next Fed meeting, the the Fed is still raising interest rates. Now, their next FOMC meeting is supposedly going to be September 20th. So that's when they're going to announce if they're going to raise more interest rates. A lot of the market is pretty much saying it's not going to happen. They're, I've heard the whole market thinks like 90% they're not going to raise interest rates. But you know what? We've had all these banks failing and they're still raising interest rates, and they've been, investors have been talking about a pause and even cutting rates, and I'm like, I don't know. Proof's in the pudding. I mean, they just keep raising. So we're going to see what happens there. In this actual recessionary environment, you know, where a lot of the banks are not taking risk, and SoFi, which is a growing bank, is taking risk. And given the demographic of their customers, I think that this is a bullish sign for SoFi. So, I may look to add to that position. All right. Okay. So looking into my existing SoFi position that I have right now. So as you can see, I hold 541 shares. Cost basis $9 and 50 some cents. Now you see that I did like FOMO my way Made a little mistake and FOMO'd a good grip of cash here on the 31st when they had earnings and they spiked. So I thought they were going to go on a massive run, but I was wrong and they downtrended. But that's okay. Not really even concerned about it because this position is not even like it's like a little over halfway done. So I still have to add more to the position. Um, so I intend to do that. Now I'm going to keep my options open as far as, and make no mistake, I am still very bullish on Crocs. I'm just more cautious. I'm going to be more patient, adding more shares. Lestat. All right. Sorry about that. This is Lestat the cat. All right. All right. So as I digress, once again, I reiterate, I'm super bullish on Crocs for the long term. I am a long term investor. I am not a trader. Um, I look to hold these positions for a very long time. Time management for expectations of time management like Crocs. I intend to hold that for 5 years, and I'll do another. I'll be following closely, but I'll do another review because remember they got those maturities in 2029 that got to look after. Um, but yeah, shout out to my subscribers. Um, hey, if any of my classmates are viewing, hey, shout out to my class. Um, and I mean, I hope you all are finding value in this. If you all want to follow along on my journey to grow this portfolio and scale it to 6 figures, 7 figures, etc., hey, consider subscribing. Hit the bell notification. Um, to all my subscribers and all my fam and everybody, I love y'all. And I hope you all are finding value and have a good day.